Hello viewers, in this video I'll be going over the S&P 500 ETF ticker symbol SPY. We have 30 or 15 minutes left in trading. On the 1 hour chart, the 1 hour RSI is currently overbought, and on the 4 hour chart we are also overbought on the RSI as well. On the daily chart we made a very nice reversal on the downtrend. We managed to completely, well, one could argue that the downtrend is still intact because it has not made new highs. So that's one argument for the bulls, but I see it as more of a sideways action. We do see the MACD converging up, and we may remain at this price level or even continue on higher. That's one possibility. But what I notice is the volume is starting to get weaker and weaker, and we have been opening up higher, so we may need to fill gaps in between. So there's a possibility. And if we were to make another all-time high, and that resistance is at $294, and the next support that I see if we do come down is the 18-day moving average, as it will be the first support we'll encounter, which is at 282.50. So if we were to, I would say, make a all-time high, that price movement will be about 2.4% move up, and if we were to find support back to the 18-day moving average, that is 1.9% move down. So on to the next module, I'll compare today's current trend with this trend that dated back to November 19th, 2009 to February 18th, 2010. I'll point out why these two charts are similar. So what we have here, we remained above the middle Bollinger Band for several days, and then we proceeded on down and touching the bottom Bollinger Band when we encountered the downtrend. We do encounter it twice here, and then we reverse up, reaching above the middle Bollinger Band, and we have a good chance of touching the upper Bollinger Band as well, so there's a possibility of that happening. So on to the next trend. So what we have here in the beginning is also a steady uptrend for several days above the middle Bollinger Band, and then we do encounter a downtrend touching the bottom Bollinger Band not once but twice, one right here, and then we proceeded to go on higher as well, and at this instance it does encounter the upper Bollinger Band. So what we have here is 1, 2, 3, 4 points, and 1, 2, 3, 4 points. So there's reason to believe if the trend and patterns are similar, the outcome or forecast would also be similar. So let's head to the forecast model. I'll go day by day where the S&P 500 or SPY went to back in 2009 to 2010. So this is where you want to focus your eyes on. So 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, 7 days out. So back then the S&P 500 was up around 86 basis points. So most likely sideways action. So that's what I'm anticipating, but I doubt we may encounter all-time high, but who knows. So here's the line graph that I compared the current trend right here and the 2009 and 2010 trend. They overlap pretty well, and that is all. If you enjoyed this content, feel free to like, subscribe, and thank you for watching.